Hey guys, I'm Arvind. I'm a chartered accountant. If you're someone who knows finance, that's really great. But if you're someone who is new to the world of finance and is curious and eager to learn what finance is all about, my friend, you've arrived at the right place. So guys, today we are going to be looking at a very interesting concept in costing. So guys, what are you waiting for? Sit back, relax and enjoy as we deep dive into this amazing concept in costing. So guys, before we start off, I want to pose in front of you three major questions. The first question being, what are fixed costs and what are variable costs? The next question being, boss, why do you even need to differentiate between fixed and variable costs? Because in no annual report do they say that this is the amount of fixed costs that the company has incurred and this is the amount of variable costs that the company has incurred. And the last and the very final question being, are fixed costs actually fixed and are variable costs actually variable in nature? Guys, what are you waiting for? Let's take a tour and let's find the answers to all of these three questions. Alright, so I hope you all are with me. So the first question, what are fixed costs and what are variable costs? To put it in simple terms, any cost that varies directly with production is a variable cost, and any cost that does not vary directly with production is a fixed cost. To give you an example, let's say I want to increase my production for the next month. I would obviously call my supplier and say that I need more raw materials. So my raw material cost is a variable cost because it directly moves in relation to my production. Okay, let's take another cost. Let's say I am occupying a factory for the purpose of production. I call my landlord and tell him, sir, this month is going a bit dull. It's a bit bleak for me. The business is not going well. Could you please lower the rent for me? Your landlord will be like, why do you even need to lower the rent? Your business is of no business to me. Why do I even need to lower the rent? I don't care about how you're doing. I just want you to be paying the rent for the factory. So here if you look at this scenario, the factory rent is in no way connected to the production. So the factory rent is actually not moving in line with the production. So the factory rent cost is actually a fixed cost. I hope the distinction is very clear, guys. Okay, moving on to the next question. Why do we even need to distinguish between fixed costs and variable costs? Okay, so to answer this question, I need to branch this into two. The first part being decision making and the second part being inventory valuation. Okay, let's move on to decision making. I will give you a scenario and please answer the same for me or please form the answer in your mind for the same. Okay, my sales manager comes to me and says, sir, we are projecting a sale of 10 crores for the next month. And my costing team comes to me and says, sir, we are expecting a cost of rupees 11 crores for the next month. I get a sudden heart attack. I decide, okay, do I need to even produce this month? Can I just cancel all the sale orders? Why do you even need to produce this month? That's when it strikes me, what is this 11 crore comprised of? That is when I need to go deep dive and investigate what that 11 crore actually comprises of. When I do a deep dive and investigate, I come to know that the 11 crore comprises of fixed cost of rupees 6 crores and variable costs of rupees 5 crores. So guys, if you look at the perspective here, yes, I am making a loss of 1 crore when I am continuing my business. But let us assume that I shut down my business. So in this scenario, what would happen is I would still need to pay the rent to my landlord as we had discussed earlier because my landlord is not going to be agreeing about the fact that just because I am halting production, I would not be paying the rent. So I would need to take 6 crores out of my pocket and give it to my landlord. Obvious, right? So when I'm not producing anything, I'm actually incurring a loss of 6 crores. But when I'm producing to the extent of 10 crores, I'm only incurring a loss of 1 crore. So in this aspect, if we had not differentiated which costs were fixed and which costs were variable, we would not have even come to a decision that we would actually need to produce to reduce our losses. I hope this is very clear, guys, right? Let's just come to the next point of inventory valuation. What is inventory valuation, guys? To put it in simple terms, whatever costs that are directly attributable to inventory need to be loaded onto inventory. In the sense, these costs would be sitting in our profit and loss account and they would need to be inventorized. That is, taken to inventory as a cost of inventory to our balance sheet. Okay, so how do we do this and why do we do this? Guys, let's take a simple example of our factory rent. As we had discussed earlier, our factory rent is a fixed cost. So, our factory rent is an overhead expense which would not have been allocated to inventory because I cannot say that I incurred 6 crores of rent to produce this material, to produce that material. I wouldn't be able to map that, right? So I would need to allocate the 6 crores to each of the materials that I had produced. How would I do this? Very simply, I would take the 6 crores of fixed overheads I had incurred, I would divide it by the normal production or the actual production, whichever is higher, and multiply it with the units that are remaining in my closing stock. Why do we do so? Because the 6 crores of fixed overheads of rent which I'm incurring is actually towards my production which is happening, which is why we divide that by the production. And we multiply it by the closing stock because we are taking the same to inventory, which is a balance sheet number, and only the inventory that is in my closing stock would be sitting in my balance sheet. It is as simple as that. So why do we even need to differentiate here, guys, between fixed overheads and variable overheads? The answer being simple. Let's take something like an electricity expenditure. Let's say my electricity expenditure comes to 5 crores. Yes, electricity cost is a semi-variable cost in the sense that even if you do not produce any units, you would need to pay the minimum EB bill. I definitely agree with that. But my EB bill is going to go up and up as and when I produce more. So EB is more of a variable cost than a fixed cost. So I am assuming it to be a variable cost because it is more dominant in terms of being variable in nature. So what would I do in relation to my EB cost? I would take my EB cost divided by my actual production, not my nominal production or actual production, whichever is higher. And if you want to understand the logic for why we do so, you can click the video above and decode the same, right? So I would divide it by my actual production and I would again multiply it by the units which are in my closing stock. So guys, if you observe carefully, the basis of allocation to inventory for my fixed overheads and variable overheads varies significantly, which is the reason why, again, for the purpose of inventory valuation, we would need to bifurcate the cost into fixed overheads and variable overheads. Okay, that leaves me with the last and the very final question. Are fixed overheads actually fixed and are variable overheads actually variable? Okay, very simple. Let's take an example to understand this. Let's say I produce 10,000 units and the variable cost of each of these units comes out to rupees 2 per unit. And let's say my fixed overheads comes out to rupees 1 lakh per unit, 1 lakh for the month. So what would be my total overheads? 10,000 units into rupees 2 per unit of variable overheads plus 1 lakh, which would come out to 1 lakh 20,000. Okay, let's say I produce 20,000 units. So what would be my variable overheads? 20,000 units into rupees 2 per unit, leading to a total of 40,000 variable overheads plus 1 lakh, leading to a total of 1 lakh 40,000 of overheads for the month. In this scenario, if you see, we had a total overheads of 1 lakh 20,000 when we are producing 10,000 units, while we were having a total overheads of 1 lakh 40,000 while we were producing 20,000 units. Guys, if you just think about it a bit, our variable overheads per unit are at the same number. But if you divide it by if you look at the overall number of our variable overheads, they are varying with the level of production. But if you look at our fixed overheads are the same at the totality level. But if you divide by the fixed overheads by the number of units, in our first case, 1 lakh of fixed overheads divided by 10,000 would be rupees 10 per unit of fixed overheads that is getting loaded onto inventory. But if you take 1 lakh of fixed overheads in the second scenario and divide that by 20,000 units, it will only be rupees 5 of fixed overheads that is getting loaded onto inventory. So to answer your question, your variable overheads are fixed at the per unit level but are variable at the totality level. And the reverse scenario applies to your fixed overheads. Your fixed overheads are fixed at your totality level but are varying at your per unit level. I hope that clarifies this. And another perspective to this would be, let's say I am expanding. I as a company am expanding and I want to increase my production scale. And I feel that the factory which I am producing right now is not sufficient. I want to move to a larger space. So to move to a larger space, I would obviously need to be paying more rent, right? I would have rent escalations coming up. So in this scenario, what would happen is obviously my fixed cost would also be going up. So in this case, even though my fixed cost is not directly going up with my production is actually triggering and increasing my fixed cost. I hope you found this perspective insightful, guys, and I hope this was a fresh perspective out of the box for you. So guys, if you found this insightful, do hit that subscribe button. Do stay tuned for more videos like this. Keep learning, keep growing. Thank you so much. Cheers. Thank you.